I'm here with U.S. Treasury Secretary Scott Besson in Washington. Mr. Secretary, thank you for joining me.
So good to see you.
Mr. Secretary, we are inside the cash room at the Treasury Department. It is almost impossible to overstate how important the work that is done in this building is to the U.S. financial system. Yet right now, there is widespread concern about the Doge team's access to sensitive payment systems. Are you worried at all that that access and that tinkering of the payment systems could affect the Treasuries market or cause any disruption?
Good. Well, Saleha, thank you for asking me about that, because there's a lot of misinformation out there. First of all, when you say the Doge team, these are Treasury employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking. They can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year. And this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned the program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL, but as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, and to the extent that getting the IRS in better shape is part of that, sure. Because look, with the IRS, what am I concerned about? I am concerned about collections. I'm concerned about privacy, and I'm concerned that the system is robust and customer service.
But do you think that if they ask for access, that is something you would consider signing off on?
There are a lot of things I would consider, but look, we're in the middle of the tax filing season right now. We even, with the government buyouts that expire at midnight tonight, we have mandated that the IRS customer-facing employees, that they're not eligible for that until May 15th. So I don't imagine anything's going to go on at the IRS until then or beyond.
Elon Musk, just half an hour ago, tweeted out that Treasury needs to stop approving certain payments. Has your staff tried to block any payments here at Treasury?
We have not, and I'm glad you asked that too. And just to put it in perspective, Elon and I are completely aligned in terms of cutting waste and increasing accountability and transparency for the American people. I believe that this Doge program in my adult life is one of the most important audits of government or changes to government structure we have seen. That when I was in my 20s, we had the Grace Report, and there's some great suggestions that came out of that, never implemented. Under Clinton and Gore, I think it was to government efficiency or reduce government. Nothing happened. So President Trump came in, there's a big agenda, and I think that there are gigantic cost savings for the American people here. And I think it's unfortunate the way the media wants to lampoon what is going on. These are highly trained professionals. This is not some roving band going around doing things. This is methodical, and it is going to yield big savings.
At any point, would you heed what Musk just tweeted and stop payments from coming through Treasury?
Look, most of that happens above us, that it comes from the departments and the agencies. We are doing a complete review, and I want to emphasize to you and everyone watching that it is an operational review. It is not an ideological review. We want to make sure that the American people are getting the best practices, and I don't think that's happening right now.
The systems here at Treasury, they're known to be a little antiquated, but very, very sensitive, but also they're working. I'm hearing, at Bloomberg, we hear a lot about investors being concerned that this could hit markets in some way or start to cause a loss of confidence. As a longtime hedge fund investor, do you have a response to those concerns?
People shouldn't be concerned. At Treasury, we move deliberately and we fix things. That's the way we work. So everyone should know that all the payments are going to be made, they're going to be in good order, and at the end of this review, there are going to be substantial savings for the American taxpayer.
Mr. Secretary, you have experience in currency markets and now
Economic Club of New York speech in August when he re-emphasized the importance of maintaining the dollar reserve currency status. But let's think about what does a strong dollar mean. It really means four things. One, that when we think about a fiat currency, a piece of paper is credibility. So a strong dollar is credibility and a rule of law that is backing it up. Two, it means a composite price on the screen, the Bloomberg Currency Index, that is the dollar moving up against that. Three, it is a bilateral price. So what's important to remember is the dollar is either weak or strong versus something else. So we want the dollar to be strong. What we don't want is other countries to weaken their currencies to manipulate their trade. And then fourth, that we want to have the best policies that create the environment for a strong dollar.
Let's talk about other nations and how they manage their currencies. The president has asked for a tariff study from several of his cabinet officers or incoming cabinet officers due April 1st. And the Treasury piece of that is to assess how to handle when foreign nations manipulate their currencies. Do you see any evidence of manipulation in foreign exchange rate markets right now?
Well, we'll wait till the study comes out, but I think just intuitively, you and I could agree that when you see the accumulation of these large surpluses, that there is not a free-form trading system that's going. It could be due to the level of the currency. It could be due to trade restrictions. It could be due to some interest rate repression policy. So it could be any of those.
Are there any countries that you're monitoring or watching specifically right now? I know the president in the past has labeled China as a currency manipulator. Do you see any other nations that need to be closely watched?
Well, I think we'll see on April 1st. And as you know, that China is the most unbalanced economy in the history of the world, and they are in a deep recession right now. They're experiencing deflation, and they're trying to export their way out of that. And we can't allow that. We want fair trade, and part of that is taking a strong position on the currency and the terms of trade.
Yesterday, the Treasury Department had its first quarterly refunding since you were confirmed. Do you have any plans of looking at how the Treasury's debt issuance strategy comes together?
Well, I think the good news is that the trajectory of the borrowing is dropping. So I was very happy to see that that it's one of the few good surprises I was left by the previous administration. So the trajectory is good, and the government's well-financed into the third quarter, and I believe that as it becomes apparent that the president's agenda is working, that we'll see a great deal of non-inflationary growth. And I think that will help us calibrate what the debt policy should be. But I don't foresee any changes in the issuance for the foreseeable future.
And what about the process? Do you think that TBAC is the most effective way of getting feedback from markets?
Well, I want to thank all the members of TBAC who are here this week. They are a very elite group. I think that maybe over time we need to think about the style of engagement. It has turned into more of a research think tank than direct market engagement, and that's going to require some changes from both sides. I believe when TBAC was originally started, it was supposed to be a market feedback mechanism, a little less of a think tank, and we've been assigning research projects, so I think there's some recalibration on both sides, but I think that whatever we do, TBAC will still exist.
Mr. Secretary, you said yesterday in an interview that the Trump administration is more focused on long-term yields than what the Federal Reserve is doing, which is a bold statement. I want to ask, how do you plan to keep a lid on yields, considering the deluge of debt issuance that is coming down the pike and also some of the inflationary risks that are ahead?
Well, one of the things I wanted to emphasize is that we are not focused on whether the Fed is going to cut, not cut. What we are focused on is lowering rates. So we are less focused on the specific of rate cuts and how do we get the whole curve down. I mentioned that the 10-year, I believe, is the important price to focus on. It's mortgages, it's long-term capital formation. So, and look, I think with the president's policies of energy dominance, deregulation, and non-inflationary growth, I think that the 10-year is going to naturally come down. And then, look, on top of it, what if we do get some big savings on the spending side from the Doge programs? Like, let's think of a naive formula. Government equals spending minus taxes. For my entire career, and beyond, maybe even back to pre-FDR, government equals spending minus taxes. The S, the Republicans, we like spending. We just wanted to raise it less. The Democrats want to raise it more. Taxes, Democrats want tax increases. We want tax cuts. What nobody's thinking about is, what if the S actually went down? What if it actually goes down because of everything we're doing right now?
But what about the inflation concerns that are stemming from the tariffs and tariff threats?
Look, I'm not sure where this narrative, the tariffs for the country putting on the tariffs is inflationary, that we could have a small one-time price adjustment, that as we saw in Trump 1.0, that the deregulation and the other policies, we stayed right around the Fed's target level. So I'm unconcerned about that. I think especially that China now, given all their excess capacity, will, no matter the level of the tariffs, will end up eating quite a bit.
There's a lot of uncertainty around tariffs. We see them threatened or signaled, and then they're taken back. It appears as if this administration might be unfriendly to businesses. Is that right? I think it's just the opposite. I think this is the most pro-business administration in history. And everything we are doing is going to
increase the after-tax return on capital, and as a result, working Americans will have very high real wage growth. That what we've seen over the past 4 years is the government and government-adjacent sectors providing the employment growth. And why have we experienced this affordability crisis? First, there was a massive spending met by increased regulation, which caused inflation, and then government and government-adjacent jobs do not cause real wage growth because they move up at CPI. So, I think that we are going to not only be business friendly, but very, very friendly for working Americans.
We're seeing companies already under some stress from the tariff threats. China is investigating Google. And also, as you know, are well aware that businesses like to be able to plan ahead, but with so much policy uncertainty, that predictability factor is gone. That all points to a little bit of a tougher environment.
Well, look, I think the best thing we can do for predictability is make the Tax Cuts and Jobs Act permanent. That would be the single best thing we could do for predictability. We can go back to the 100% expensing and add some new features that I think business is going to be very happy with. But again, the most important thing is that it filters down to working wages, which is what we saw in President Trump's first administration. Hourly workers did better than supervisory workers.
Well, let me ask you about the tax plan then. On the campaign trail, Trump floated no taxes on tips and cutting the corporate rate and a lot of other proposals. How are you going to juggle which campaign promises are high on that the priority list for the bill, considering how costly everything would be?
Well, we're just starting the process now, and we'll do what President Trump will give us his priorities, but I can tell you the real priority is fixing this affordability crisis for the American people. And when you think about no tax on tips, no tax on Social Security, no tax on overtime, potentially putting back in auto loan deductibility, all of those benefits accrue to the bottom 50% of income earners in America. They have really taken it between the eyes for the past 4 years, and that's unsustainable.
Before I let you go, Mr. Secretary, I want to ask you if you have had your traditional weekly meeting with Fed Chair Powell yet.
We did. I did an away game over at the Fed. We had a very nice breakfast. Chair Powell and I don't know each other well, so it was very constructive. How
do you view that relationship involving the two agencies and buildings are supposed to work very closely together, and you've had some criticism in the past of his work?
And as I said at my hearing, everything I'm going to talk about is things the Fed's done in the past. Prospectively, monetary policy, I will not comment on, and I'm sure he's going to do the right thing, so there'll be no criticism.
All right. Well, Mr. Secretary, thank you so much for joining.